Welcome Forex traders to this video brought to you by Admiral Markets, where I take a look at triangles and breakouts on the major currency pairs, which are Eurodollar, Pound Dollar, Dollar Yen, and AUD USD. First of all, be aware that this video is intended for a global audience and may not be suitable for everyone. To find out if it is, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Use the same path to request a copy of the risk disclaimer. You should be aware that trading for exchange is considered high risk and may not be suitable for everyone. To find out more, please contact a financial advisor for more information on that. This video is for educational and informational purposes only and is not advice. And by continuing watching this video, you agree with this disclaimer. First thing on the list is the Euro-Dollar 4-hour chart, and we see the triangle consolidation indicated by the green trend lines taking already place for a couple of weeks now. Price trying to break through to the upside, in fact, here not too long ago on Friday, and ultimately not pushing through too much, but it could be a first signal of a bigger bullish breakout to come. That is what I'm expecting, although of course if price breaks through the bottom trend line, I would also be interested in a bearish breakout. Hence, ultimately, I'm looking at these green lines to indicate what trade and what setup I'm interested in and what direction. First of all, a bullish breakout, of course, I would be interested in taking the trade with this green arrow, and a bearish breakout, this red arrow here to the downside. For the moment, the bullish breakout perhaps looks a bit more logical and perhaps more likely, despite the bigger downtrend on the daily and weekly and monthly charts. That's because we have a zigzag formation here, and at the moment it looks more like a consolidation for an expansion of the zigzag than anything else. Of course, if price, and specifically a 4-hour candle, what I'm looking for is a 4-hour candle, break below the trend line or above it, then that would be my signal and setup for this week. I'm looking for a candle that has a high near a close near the high or a close near the low for the bearish breakout. I also want a sizable, a decent sized candle, and I also want to see a majority of the candle above the resistance or below the support. In case of the bullish breakout, preferably also not only above the resistance trend line, but also a close above 114.25, which is always a psychological round number, the quarters and 3/4, but even maybe perhaps 114.50, the midpoint there. The target of up and downside, in my opinion, is quite simple. If I put a fib on this very first zigzag potential, if this is a zigzag, that would be one zigzag. This is a retracement to the 61.8 fib. The target of that is simple. The minus 272 target at 116.50. If I draw the fib just a bit differently and use this swing high, swing low first of all, which is easier to see on a 4-hour chart, then we have a bit different fib, then it's 116.25, which is not the minus 272 but the minus 618 target. And that's because price already stopped at this minus 272 target after hitting this 50 fib, then the next target is that. So you can see both targets lining up around 116.25, 116.50. Besides those two fibs, there's also a little bit of a zone right in here, which could act as a resistance. In the daily chart, that is a pretty good confluence area with the targets for more downside. So I'm looking for a short actually at the targets 116.25, 116.50 as a long-term downtrend continuation of the euro dollar for further continuation of that trend. So I'm looking for short setups in that point. The short setups I'm also looking for are upon the break of this support, and then the target would be the 886 fib at 111.35. If price does manage to break through the bigger bottom here at 111, then obviously things change and a deeper target could be sought and looked for, and that is, in my opinion, basically actually looking at the monthly chart, in fact, putting this fib on, and I'm looking for a target at parity basically, although of course there will be intermediate targets, and those I can find on the weekly chart, and I would put a fib on this swing high, swing low right here. And the intermediate targets, well, 110 obviously because of the psychological round number, but below that 107, which is the minus 272, and then 101.80 and 105 by the way as well, because that's the psychological round level. So below 111 there could be a lot of downside continuation. For the moment though, it seems like price is going to correct higher before anything else. Before I continue with the dollar yen, AUD USD, and pound dollar, please be aware of these webinars the upcoming week. 16th of February here today on Monday, weekly FX recap. Then Wednesday, price action channels. And then Tuesday, Wednesday, Camarilla and intraday Forex strategy. And then last but not least, Thursday, learning multiple time frame skills on Thursday at 6 p.m. Central European time. The dollar yen looks pretty straightforward to me on the daily chart here. It looks very clear that this is a triangle to me with an A at the bottom here at the moment. This a B, this is a C, and this is a D. And now the E part of the triangle could complete the entire triangle, and an upside trend continuation could continue anytime soon when the triangle completes. Now when that triangle completes is another question and could actually take quite long. It could be a complex correction. It might take a while before the uptrend indeed continues and price breaks above the resistance spot. The fifth wave typically ends by placing a fib basically from here to here, and it could be easily any of these fibs like the 61.8 and the 78.6 fib. And of course the invalidation level of this triangle being correct would be this bottom. If that bottom breaks, then that is not a wave E anymore, and the entire situation is different. So that's a key level, and that key level here, the bottom of basically the wave C is 115.80-ish. The key bottom, or the key top, excuse me, for the upside is actually right in here, which is the breakout level for upside continuation, and price is then breaking above the triangle. So key level for the breakout right in here. Key level for the triangle continuation is here, and wave E, the final part of the triangle, could stop anywhere in between here and turn around for that upside continuation. If price does break through the wave C here, then perhaps there's something else going on, like a bigger correction like this, and then actually the sideways price action not necessarily being bullish but actually being bearish, and then this could be an A, B, C, D, E for further downside. So that's something to be aware of. It could also be a bearish wave E instead of a bullish wave E, and that's why both this top and this bottom are key levels in that triangle. The pound dollar bouncing basically off the weekly support at 148 and not able to continue much lower despite the pretty decent downtrend that we've had, of course, and price now breaking above the resistance line. How far can this correction go? Not all too sure at the moment. Basically the bullish price action seemingly looking great. I want to see how price responds when it makes the dip and whether it can bounce here. If it is, then the uptrend channel seems pretty sturdy in place. So that's, if anything at the moment, I'll be looking for is a bullish bounce off support. Last but not least, the EURUSD kind of getting a bounce back at the bottom, seemingly looking like a potential double bottom at least. And the bearish breakout here, pretty good, but ultimately the bearish momentum, not able to push through that bottom. And that, of course, can always happen despite the pretty good breakout that we had on the EURUSD, and price climbing nicely back to the 78 level. So for me, this is a bit of a caution at the moment, both to the upside and to the downside, and just keeping an eye on price action as it develops this week. Looking at this pattern, which is seemingly looking like a rising wedge, price action is a bit more bearish and could expect to fall. One of the signals I'm probably looking for is actually a bearish daily candle. I know the time frame is quite high, but as soon as that is settled and shown, that could be the signal of further downside on this EURUSD. Thank you for watching this video. Make sure to take a look at Admiral Markets in the social media, and also, of course, I look forward to see you in the webinars this week. Happy hunting, and see you soon. Cheers.